Hey there! Welcome to this quick and easy guide. If you've ever wondered what shares and dividends are, or why people are always talking about the stock market, and felt a little lost in the jargon, you're in the right place. We're going to simplify it all for you. Let's break down these concepts in a way that actually makes sense for you as an ICSE student. No complicated terms, just clear explanations. So, imagine your favorite pizza place wants to open more outlets, maybe even expand to a new city, but they don't have enough money. Expanding a business requires capital, and sometimes they need to look for outside help. What do? Simple. Well, relatively simple. They ask people like you and me to give them money, to invest in their vision. In return, they give us a piece of their business. This piece is called a share. It's like a small slice of ownership. Buying a share means you now own a tiny slice of that pizza place. You're not just a customer anymore, you're a part owner. The more shares you buy, the bigger your slice. The more influence you potentially have. And just like that, you're now called a shareholder. Congratulations, you're an investor. Now, why would you want to own shares? What's the benefit for you? Well, when the pizza place makes a profit, when it's doing really well and raking in the dough, it sometimes decides to share a part of that profit with all the shareholders. It's a way of saying thank you for believing in them. This money you get is called a dividend. It's your reward for being a shareholder. Think of it as a thank you for supporting the business. A little bonus for your investment. Let me give you a quick analogy. To make this even clearer, imagine you and 4 friends chip in to buy a cricket bat for Rs. 1,000. You all want to play but need the equipment. Each of you pays Rs. 200, so you each own 1/5 of the bat. You're all equal partners in this venture. If you later sell the bat for Rs. 1,200, you each get Rs. 240, the extra Rs. 40 is your profit, sort of like a dividend on your investment. It's the return you get on your initial contribution. But there's more. This is where it gets even more interesting. Shares can also be bought and sold. They're not just a static piece of ownership. If the pizza place becomes super popular, a real hit in the neighborhood, people might want to buy your shares at a higher price, because they see the potential for future profits. That way, you can make a profit just by selling those shares. It's called capital appreciation. Of course, there's a risk. Investing always involves some level of uncertainty. If the pizza place doesn't do well, if it starts losing customers and struggling to stay afloat, the value of your shares might drop and you could lose money. This is the downside of investing. That's why investing in shares is a bit like playing a game. There's a chance to win, but there's also a chance to lose. It's all about understanding the odds and making informed decisions. Let's touch on a key formula you'll need for your ICSE exams. These are essential for solving problems related to shares and dividends. Dividend per share equals sign. Total dividend, number of shares. So if a company pays a total dividend of Rs. 10,000 and there are 1,000 shares, meaning the company has decided to distribute 10,000 rupees among its shareholders. Each share gets a dividend of Rs. 10. Simple division. And here's another important one. This one helps you understand the return on your investment. Dividend percentage, equal sign. Dividend per share, face value of share. 100. If the face value of the share is Rs. 100, and the dividend per share is Rs. 10, meaning the company is paying 10 rupees for each share with a face value of 100. The dividend percentage is 10%. That's your return on investment expressed as a percentage. To sum it all up, shares are your ticket to owning a part of a company, a way to participate in its growth and success, and dividends are your share of the company's profits. A tangible benefit of being a shareholder. Investing in shares can be exciting, a chance to grow your money and be part of something bigger. But remember, it's not without risks. Always do your research and understand what you're investing in. So next time you hear someone talk about shares and dividends, whether it's in the news or in a conversation, you'll know exactly what they mean, and maybe even impress your friends. You'll be able to participate in the conversation with confidence. Good luck with your exams, and keep learning smart. The world of finance is fascinating, and there's always more to discover.